Bitcoin just hit its highest weekly close ever. Is this the start of a massive bull run, or are we in for a summer slump? Experts weigh in on what's next for Bitcoin and how a U.S. credit downgrade might actually boost crypto. Find out what you need to know to navigate the market. In the latest video from Lark, the U.S. has received a credit rating downgrade from Moody's from AAA to AA1, adding to previous downgrades from S&P and Fitch. This downgrade stems from the country's growing debt, political gridlock, and rising entitlement costs. While some fear market instability, Lark argues this is more about perception than reality, as the U.S. economy has thrived despite past downgrades. He points out that U.S. Treasuries are still considered a safe investment and that a weaker dollar might actually boost Bitcoin, which tends to perform well when traditional currencies falter. Lark also discusses the Fed's increased holdings of U.S. debt and its potential inflationary impact. He suggests this could further strengthen Bitcoin's position. He mentions deals Trump made with UAE, Saudi Arabia, and Qatar, potentially leading to a petro $2, strengthening the U.S. dollar and impacting alternatives like BRICS. Despite short-term market jitters, Lark believes the U.S. economy remains robust and Bitcoin stands to benefit either way. He encourages viewers not to bet against the U.S. or Bitcoin. The recent downgrade by Moody's, while not entirely unexpected given the U.S.'s fiscal situation, does raise concerns. News articles highlight the increasing political polarization surrounding the debt ceiling, making a swift resolution unlikely. This uncertainty adds to market volatility and potentially fuels interest in alternative assets like Bitcoin. However, it's important to remember that Bitcoin is still a relatively volatile asset and its price can be influenced by various factors beyond the U.S.'s credit rating. In the latest video from Cowen, he discusses Bitcoin's price action and its potential for new all-time highs. Bitcoin recently achieved its highest ever weekly close, currently around $104,000. He points out that Bitcoin has outperformed traditional markets like the Nasdaq and S&P 500. Ben examines the bull market support band, 20-week simple moving average SMA around $93,000 and 21-week exponential moving average EMA at $92,000. Bitcoin has closed above this band for 4 weeks, a positive sign. However, he cautions about a potential summer lull, similar to previous years where Bitcoin's price stagnates during the summer months. He suggests the next 2 weeks are crucial for Bitcoin to break out to new all-time highs. If it fails, the price might decline before potentially rising later in the year. He notes that during previous summer lulls, Bitcoin dominance increased, implying altcoins might suffer while Bitcoin maintains its value. He also mentions the recent options expiration in traditional markets, which could influence Bitcoin's short-term price movements. Based on recent news, the overall crypto market sentiment seems cautiously optimistic. Several analysts predict a potential bull run for Bitcoin later this year, fueled by factors like increasing institutional adoption and the upcoming halving. However, macroeconomic conditions, particularly inflation and interest rate hikes, could still pose challenges. The correlation between Bitcoin and traditional markets remains a concern, as market downturns could negatively impact Bitcoin's price. While Bitcoin's recent price action is encouraging, the possibility of a summer lull adds uncertainty to its short-term trajectory. It's fascinating to see Bitcoin defying traditional market trends at times, yet remaining sensitive to macroeconomic factors.